Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. Today we are going to talk about Robinhood's IPO and whether or not Robinhood is a hot stock that you should buy. Before we get to that, I have to give you a little bit of context. Last Thursday, July 29th, Robinhood debuted. You could buy shares of Robinhood, you could sell shares of Robinhood. It was now officially a publicly traded stock. Unfortunately for Robinhood, the stock closed 8.4% below its initial public offering price, and that was at the end of the day on Thursday. So you might say, that's not great, but what's the big deal? Well, according to the New York Times, a first-day slump like the one that Robinhood experienced is very rare, especially in 2021. On average, shares and IPOs in the United States have gone up 39% on their first day of trading this year. So what happened to Robinhood? Well, that's not important because what happened yesterday, Tuesday, August 3rd, leads us into what we want to talk about. Yesterday, Robinhood's stock rose 48%. And according to the Wall Street Journal, Robinhood was the most traded stock on the retail trading platform operated by Fidelity, surpassing AMC Entertainment and Tesla. So, is Robinhood a buy? Is it a hot stock that you have to own? Now, I'm not offering investment advice, but I wouldn't touch this stock with a 10-foot pole. My thesis is simple. A business that does not do right by its customers will never succeed long-term. And as a long-term investor, I only want to invest money into companies that have a bright future. And I would never invest money into a company that actually harms their customers. Now, you might say, harms their customers? That's a little dramatic. But on June 30th of this year, CNBC reported that Robinhood had agreed to pay nearly $70 million to the Financial Industry Regulatory Authority. It's known as FINRA, F-I-N-R-A. And this was to settle allegations that the brokerage caused customers widespread and significant harm on multiple different fronts over the past few years. And that $70 million, by the way, represents the largest financial penalty ever ordered by the organization, which is a non-government entity authorized by Congress to oversee hundreds of thousands of brokers across the United States. Now, $70 million is a lot of money, but not when you consider how much money Robinhood made in 2020. According to the company's S-1 filing, Robinhood's revenues were $959 million in 2020. 75% of those revenues come through something that they categorize as transaction-based revenues. This means that anytime you buy or sell anything on Robinhood, whether it's stocks, options, cryptocurrencies, Robinhood's making money. One of the primary ways they make money is through something called payment for order flow. You can listen to episode 5 of Compound Money Quietly and learn all about that. But I was really surprised to learn that the majority of Robinhood's transaction-based revenues did not come from trading stocks, comes from options trading. To be more specific, Robinhood generated $440 million from making it easy for any investor to trade options. Now, let's zoom out for a second. Who is using Robinhood? According to Robinhood, more than half of their customers are first-time investors. This is the first time they've ever opened a brokerage account. And the median age of these customers is 31. So if we zoom out again, Robinhood has a customer base that is predominantly novice investors between the ages of 18 and 40. Now, going back to options trading is super risky, super speculative, and for all intents and purposes, really dumb. The language on Robinhood's site, though, would make you think that they are allowing you to experience something that you've deserved to experience your whole life. This is what their site says about options trading. Robinhood empowers you to place your first options trade directly from your app, which is basically just saying Robinhood empowers you to risk your financial well-being for a quick thrill. Now, I'm not being overly dramatic here. There are a number of highly cited studies that come to the same conclusion about frequent trading. Investors that engage in frequent trading do worse long-term than investors who are patient, who buy and hold, and who don't act like hyperactive lunatics. One study puts it like this: trading is hazardous to your wealth. And that study was just talking about buying and selling stocks. As I mentioned, options are much riskier. So let's recap. Robinhood makes the majority of its revenues from new investors engaging in highly speculative and highly risky behavior. So if you invest in Robinhood, you believe that Robinhood will continue to make more and more money this way. That's what Robinhood's banking on. The more Robinhood's customers buy and sell, the more money Robinhood makes. To make more money, Robinhood needs to get even more novice investors to sign up and start trading. It's a classic example of a win-lose incentive system. Robinhood wins when customers buy and sell, but customers lose because frequent trading is proven through empirical studies, academic research, it's proven to be detrimental to long-term wealth accumulation. For Robinhood's business model to work, Robinhood needs their customers to continue doing something in the short term that is proven to be harmful to them in the long term. It reminds me of a cigarette company. But imagine if the cigarette company loaned their customers money so they could smoke more cigarettes. You might be wondering why I'm saying this. It's because I learned from reading Robinhood's S1 filing that Robinhood made about $100 million in 2020 loaning their customers money to buy stocks. Yes, you can show up to Robinhood, not have, 2 pennies to rub together, and Robinhood will give you money to engage in what is most likely going to be highly speculative, highly harmful, counterproductive behavior. That's Robinhood's business. And that's just a business that I would not want to be part of. I would not want to own a piece of. And I don't think it's going to do well in the long term. Something that we've talked about in the past, and Warren Buffett has talked about this extensively, but the integrity of the management is very, very important. If the management has questionable integrity, if they mislead shareholders, they might be misleading themselves. They might fudge something that ends up causing investors to falsely assume that, things are one way and then find out that they're the other way, and things can just get ugly. Now, I'm not saying that's the case with Robinhood, but based on their track record, specifically with how they communicate about these issues, I don't regard Robinhood's management as being of high integrity. Let me read you what Robinhood says in this S1 filing that I wrote down on my notes here, barf. Quote, "We take pride in the fact that we are expanding the market by welcoming new investors into the financial system and helping the next generation of investors build sound, long-term investing, saving, and spending habits." It's like, what are you talking about? Looking again at the S1 and how Robinhood makes their money, there is nothing about their business model that would make them have any reason to encourage long-term investing. And this idea that Robinhood is somehow helping the new generation of investors build sound, long-term investing habits, that's just asinine. It sounds great, but when you look at the numbers, when you look at the incentives, it's crystal clear that Robinhood has zero interest in attracting investors, or let alone educating investors about the right way to invest if you want to build long-term wealth. If Robinhood is serious about that, then they need a different business model. There's one other quote here I want to read to you before I conclude my rant about Robinhood and why I think their stock is something you should avoid like the plague. And I quote, "We are simplifying how people interact with financial products, allowing new customers from all walks of life and generations to participate in the financial system. While we have established a strong brand and achieved significant growth to date, we believe we are still in the early stages of growth in our existing markets. For example, according to a 2019 Pew Research survey, approximately 60% of all Americans still do not have investments outside of their retirement accounts. And according to a 2020 Gallup poll, an even greater percentage of young adults aged 18 to 29 have no money invested in the stock market at all. Accordingly, we believe there remains a significant opportunity for us to continue growing our customer base as we attract new investors to financial markets." I'll explain a little bit more about that quote in a second, but I need to give you a little bit of background information. In the last, I'd say, week or so, I've been working on just tightening up our mission, what we're about, what we're trying to achieve in the long term. The reason I say this is because, it's been a lot harder than I thought to sort of button up, what is it that we're trying to achieve? What's our mission? And a lot of that has to do with just, I'm so close to it. I'm living and breathing this stuff. But when I first read that quote that I just read to you, it gave me a sense of clarity. The fact that there are all these, millions of investors, millions of future investors that are, very much vulnerable to the marketing efforts of Robinhood, that will be onboarded to a platform where the wrong behavior is incentivized, and just knowing what that leads to for them. These are people who, like us, are trying to build long-term wealth by putting their hard-earned money, their hard-earned savings into the stock market. And the fact that there's a company that is, has every incentive to just not care about that, who also is just so disingenuous about what they're trying to do or what their intent is, I want to make sure that we really offer a good opposing argument. And it's not just about the argument, it's about more people discovering what it is we're talking about. This podcast is not about me. It's about uncovering the fundamental truths about how investing works, about how long-term wealth is created by investing in the stock market. It's about surfacing the lessons that the greatest investors of all time have already figured out. And not just surfacing them, not just talking about them, but internalizing them and then applying them, because none of the knowledge matters if we don't know how to use it. And I think part of the responsibility that we all have as people that are like woke to the truth about investing is we need to call this stuff out. Take a look at Robinhood's S1. Do your own research. You don't have to take my word for it. But this company is preventing people from accumulating a lot more wealth than they would if they apply these principles that the greatest investors of all time have already figured out, have already used, and have already proven that they work. We'll be back with more episodes this week, so make sure you subscribe on Apple Podcasts or Spotify. Please leave a review, drop a 5-star rating. Of course, only do it if you really got something out of this episode. Appreciate you taking the time to listen. Excited to keep on building this momentum that we have here. As I mentioned, every episode is getting more streams than the previous episode. With that being said, this has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. We'll talk soon.